Ladies and gentlemen, welcome back to the channel here, Casper aka Uselink, and today we're going to make our video on the Twitter, the Twitter recap. Recap. Can I say that? I don't think I can. Recap, excuse me. On the from Twitter, what have I found interesting for the past few days? There has been a lot of stuff going on in gold, a lot of stuff going on the markets. So let's dive into business here. As always, these are the charts, the other people that I follow on Twitter that gives me, different views, and then I do my own personal evaluation on them, and maybe I agree, maybe I not, I don't, but still, it's nice to see someone else's perspective at some point in time. So, yeah, let's get straight into business here. Brian G with emerging markets versus the SP 500. You can see the EEM SPX here. We are now at the lows from just before the 2000s. And talking about emerging markets being undervalued against the SPX or the SP 500, it's just an amazing view. And again, if you're looking at the Brazilian ETF, that looks ready for a breakout. So yeah, I mean, I guess the emerging market is where you want to find the investments in my view right now. Looking at this fantastic ratio chart here, long term, I like it. Grady Gold has had a big fat bullish monthly engulfing reversal candle here at present, pushing up against the big monthly closing. Prices at yellow breakout level at roughly 2,000. The fourth or fifth breakout try is usually successful. This will be the fourth. And are you watching this? Yes, we are. We have 1 day left of trading for gold. That's tomorrow. Then we will see where we close on the monthly. Where are we now? Just so I can, we are $4 below 2,000. I would really like to see that close above the 2,000. That would be the first time ever, if I'm not mistaken. Yeah, exactly. We could close above 2K for the first time ever for gold in the US dollar. Obviously, we have all-time highs for against the euro, against the yen, against the Turkish lira, and so on. And of course, we will have all-time highs for gold in USD as well. I mean, that's just how gold works against fiat. Hedgehog trader here, inflation, CRB against the SPY. Long blue downtrend here, going back 10, 12, 13 years. Minor breakout, retesting, boom, and now we're just having a major pullback here, and we are going higher again. I completely agree. Commodities for this decade is the place to be. North Star, I know nothing about Bank of America, but technical analysis says that they have a problem. And oh, do they have a problem? I agree, major breaking down here from this rising trend line here. We have the up there, and we're breaking down now again. Same thing as we did over here, more or less, even though we had, a bit of a different high there. But anyways, we are definitely going down here. And I think if you go down here to roughly 18, you could be seeing a bounce there, and then you would have a classic head and shoulders topping pattern with the neckline at roughly 18. Also, it corresponds over here with the pivot low there, the highs here. Just 18 is just a major level, and I think we'll get a bounce there, and it should, well, not should, but there's a good chance or probability that we are going into a head and shoulders from there for the Bank of America. Not looking good for the banking sector, even though our great people in charge says that the banking sector is just fine. I don't know. The great Martas here with the SPX, again, we are now making higher highs, lower lows and lower highs, and we just have taken out a 2-year long trend line here on the daily closing basis, and we are now going back down here again. I will say this though, we have a 1, 2, 3 spikes low here again. So let's see what happens here at the third low. What will happen? But again, the big indexes does look like momentum is not there anymore. Let's see. Again, great markets here on Nvidia. Diamond top looks like it here, actually made to perfection. I had the neckline here, coming across there for the big head and shoulders. But again, Nvidia, in my view, is now setting up for that close of the gap at a tad above 300 until proven otherwise. That is my bias. So yeah, DAX here again. You can see it here, major breakdown there, and now we are just, yeah. This looks like a major rounding top. Yeah, as he points out here, a major rounding top. And let's see where we're going. There are some support coming in. But for now, it's lower lows and lower highs for the big index in Germany as well. So it is what it is. Ford here again, that is a nasty weekly chart, weekly candle. Big volume, getting below the 200 weekly moving average, and you can see the lows here coming across. If you were to draw a trend line, it would be right here, and we have the breakdown for Ford. That's a big company telling you that it's not looking good here. My good man Andy from Finding Value Finance. Gold again against M2 money supply. He could have actually have extended this one all the way up to here and then drawn it, but anyways, the picture is the same. Gold is really trying to get some air under this thing and start to outperform the M2 money supply. I will say this though, the M2 money supply is at the all-time lowest, I think, in many years, decades. But still, having gold outperform the M2 money supply is exactly what we want to be, especially given that we're looking at the 1980 high. So that should mean a thing. But when and if we start to curl up here again, and which I think we will, gold looks fantastic. Also here against total bank credit, same thing again here, leading pattern, major rounding bottom. So if you had this on log scale, I would assume you would have a clear cup and handle pattern right there with a horizontal resistance coming across there, the low there, and the highs there. So it's a beautiful, clean horizontal level to look for. And yeah, gold again should be on the verge of something you only get once every 2 or 3 decades, in my view. The Russell here against small caps looks in big trouble. That is nasty. That's a nasty weekly breakdown. Also checking out this zone here, the demand zone, supply and demand zone. You can see it coming across. Man, that's not looking good. Again, often we get that retest or the researching here to the upside, and then we might roll over. But still, that is a bad start of or a bad outcome, or at least an unexpected outcome of a bear flag right there, or bear pennant. Simon Clot here. If you're not yet long gold, you're very late to the party. Here's a potential entry point for longs on a pullback down to roughly 1987. Did we get that this today? Actually, we could have. Maybe we could. Maybe let's see. Okay, down to 19. Okay, but still, we're not out of the woods on that one. But I agree here. Gold, that monthly candle that we have seen here, this one here, that's just a major reversal. You know, insanely high momentum, just taking out roughly a half month worth of candles in 1 month. So that speaks volume really. And yeah, we're going to visit the all-time highs here. And then some jittering back and forth, and then we'll get through it here into 2024. Gold looks amazing. It really does. Stefano here, CRE. Here's why you should remain bullish on commodities. He's pointing to the 2000s into the global financial crisis, big drop, and then massive hockey stick move to the upside. And the resemblance is just quite astonishing, really. And if we get that move here again, you have a roughly a double, well, 70% here on that move again, all the way up to here. Again, a second wave of inflation looks like is in the making. I like this one here, even though it's not a technical chart, but still, you know, rich and poor. I couldn't agree more. Very 99.99 of the percent of the time, this guy is poor as F. And yeah, you don't want to be that guy. You want to be this guy here, just being very casual about it. The market sniper, Francis Hunt here. Same thing for gold. I've mentioned a few times, but I would say it again. My take is this monthly break on the 2000 mark will stay broken until unlike the other monthly rejections here. And what he's pointing to is these massive wicks here to the upside. Again, we have 1 trading day left. That's tomorrow, obviously. And again, I don't see any major wicks coming in for tomorrow. Maybe they'll try to push it down below 2K, just for them not to have that monthly close above 2K. But we will not see a wick like this. That's for sure. So yeah, again, gold. This is a major bullish pattern here, no matter what asset it is. You know, major surge, triple top here with an inverted head and shoulders as well. That's just tons of good upside for gold here into 2024. That's for sure. Hedgehog again, trader, copper miners versus the U.S. markets, the SPY, having backtested once again, set to outperform. Maybe you can see here again, wedge here broken, retest all the way up again. So we have this level here at roughly between 0.1 and 0.105. We have this major resistance, and it could be that we are about to surge to the upside again here at the 200 daily weekly, moving average for copper miners. Again, that will happen in my view if copper can get above $4 per pound, or $4 on the futures. Then we will see a big pop here again. But right now we're below at roughly 3.67-ish, in that range. And yeah, it needs to prove itself above $4 in my view. Then we will see that major outperformance. But again, you could recall that this could also be a major inverted head and shoulders with a neckline at roughly 0.1. So great charting there. I haven't looked at that ratio until this time, so I really enjoyed it. The next big trade, buying in stage 4 ignores the stage 1 basing that requires to produce a big stage 2 uptrends. So this is basically, if you want to keep it simple, on the weekly, add a 30 weekly moving average and follow these stage analysis here, the 1, 2, 3, 4 stages, and that will keep you out of the trouble a lot of the times, out of the noise, and you should be able to catch a bigger chunk of the move, the middle section here, quite often if you are just keeping it very, very simple on the weekly chart, really. So yeah, I think that was it for me for this video. Again, follow these guys here. I learn a lot from them, and leave comments below. Do you agree, disagree with the charting from these guys? Again, I'm not saying that I agree on gold. I clearly do, but yeah, I found them interesting because some of the charting sometimes goes against my view, and but yeah, it's very good to have a reality check once in a while to see if you're still on the correct page. Guys, have a great one here, and yeah, we will definitely see you in the next one. I hope. Have a great one. Bye.